All right, guys. So we are back here. We got Microsoft earnings. We got Google earnings coming out today, bright and early. Market's kind of choppy ahead of these tech earnings because these are kind of this is a big day. We are holding both Google and Microsoft. Microsoft performing a little bit worse on the day. Let's go ahead and put the chart up so you can see it. Busy day for me here, man. We're working as much as we can. Again, do me a favor, hit the like button. If for whatever reason you really want to see Microsoft's earnings call, let me know and maybe we'll think about switching up. But yeah, subscribe, notify, hit the notification bell. Let me take a sip of my coffee, see if I can do it without spilling. I filled this coffee cup to the brim here. And so let me see if I can drink this thing without spilling it. What's up, Kay? What's up, Hannah? What's up, Alyssa? What's up, Het? What's up, David? You're a retail trader? That's cool, man. Me too. Good for you, bro. Again, we got Google, Microsoft earnings, Q3 coming out. Let me get some music playing here if we can. You know, we're gonna go with the Google stream. Coffee at 2:16 p.m. Yes, sir. Hey, listen, I'm gonna be streaming for the next 2.5 hours, and so you better believe I'm drinking coffee. We got Snapchat earnings as well. I forgot about that one. So yeah, we do have that one also. Hey, my guy Kay, thank you so much. I appreciate it. Thanks for the support. If you guys didn't catch us, we were on Top Step TV earlier. What else we got? Let me get some music playing here. Hold on, team. And slap the like button. We got 6 likes. Yeah, we're gonna cover Snapchat. We're gonna cover Microsoft. We're gonna cover really all of these big boy stocks today for this earnings call. Again, we got Microsoft, we got Google, we got Snapchat, we got Visa, we got Teladoc, Texas Instruments, we got Matador, Boyd Gaming, Range Resources, Hawaiian Holdings, Stride, a bunch of earnings. To be honest, can y'all hear the music? You should be able to. Here. Again, slap the like button. Yeah, really appreciate it. Yeah, I mean, how many John Londons are there? You know, thank you. Again, we thought about doing Microsoft. And so again, if you want to see Microsoft, that's cool. We can do that. We'll do a poll right now. Would you rather listen to Microsoft or Google? You can vote on the poll. I'm curious to see. Yeah, all good, dude. It's all good, man. I'm just messing with you. All right. So, market's pretty flat today. Google on the left, Microsoft on the right. Yeah, it's Microsoft's at 4:05 technically. Google's supposed to be right at 4 p.m. So it looks like most votes are Google right now. But you're welcome to vote. Again, you can hit the like button as well if you haven't yet. We appreciate it. Thanks so much. The reason I really chose Google is because Microsoft's earnings call is at 5:30, right? So it is only 3 o'clock right now, 3:20. And so if I'm going to watch Microsoft's earnings, that means I'm going to have to basically sit here for 2.5 hours before the earnings call starts. And I just figure like y'all are going to get bored sitting here waiting for that thing to start. So I'd rather just cover Google. Again, we could probably pivot to the Microsoft earnings call afterwards. We could probably cover both earnings calls realistically, and that's what we'll shoot for. But yeah, let me know if you got like, you know, if you really want to watch one. I'm holding both of them, to be honest. I'm holding both Google as well as Microsoft. My Google position's a little bit larger than Microsoft. I'm green in both of them right now. They're both treating me pretty well. I've already taken profit in both of them as well. And right now it looks like Google is winning the voting pool as well. So yeah, vote. Let me know what you guys think. How about Snap? Yeah, we're going to cover all of them. So like we're going to cover all the major ones that dropped today for sure. Like without question, we're going to cover all of them. So yeah, so this includes Google, Microsoft, Snapchat, and more. Go live at 4 p.m. Eastern Standard Time. Oh man, I didn't mean to click this scroller. So I wanted it to be like this. And then like that. There we go. 50,000 on Google. Microsoft earnings are coming out at 4:05 p.m. So Microsoft scheduled for 4:05. Alphabet Google expected at 4. Snapchat expected at 4:10. Visa at 4:05. Teladoc at 4:05. Texas Instruments at 4. Waste Management at sometime after close. They didn't specify. Looking at some other ones, I mean, we don't really have anything else super big, to be honest. Y'all remind me to switch headphones out, okay? I'm using AirPods. Just remind me to switch out. I'm in shares. Hey, what's up, Yair? Again, it's a pretty good day. I mean, we're super green today. RTX helping us. Coca-Cola helping us. Google is up a lot ahead of the earnings call. We're pretty green in almost everything, including Tesla, including Google, including Walmart. You know, we're still in Walmart. We've been holding Walmart for a minute. I'm wondering when the next dividend main payments come out. Let me see. So again, we're in Walmart. So Walmart pays divvy on the next one's December. It pays out on January. So got some time there. Does Google pay a dividend? And they don't pay anything. But yeah, we're pretty good today. We're pretty green. Again, biggest one's Coca-Cola. We bought that one a couple days ago. I mean, we're still like slightly down in the position though on Coca-Cola, to be completely honest. Our average price is $56.60 and we're at about $55.80. So, you know, we're less than $1 away from our average price, but we're still technically red in Coca-Cola. But we're green on the day on it, which, you know, just for transparency purposes. So again, you can kind of see Microsoft starting to test these highs. We've been following the 200 EMA, the volume weighted average price level. I got Google in my retirement account. Can it just fly so I can retire? Hey, good luck, dude. Yeah, either this is going to protect the market when the market really needs it because the huge bear action we've gotten early in the week, or we're going to get a big dip. You know, Tesla down pretty substantially here, down like 20-something% over the last 2 weeks. So, you know, Tesla dragging the market down. Nvidia is another one, and maybe Microsoft and Google will have some updates regarding, regarding AI, you know, and those influence on their bottom line. Nvidia has been pretty sturdy at 436 now, you know, really it dipped a little bit at the opening bell today, and then bounced all the way back to where it was prior to that already, just reached up to 436. Remember, Nvidia's earnings call is going to be NVIDIA's earnings call is going to be November 24th. So, about a month from now, we get NVIDIA. So not yet. Again, it looks like Google is winning the voting. So we're going to end the votes. Since we got 45 votes, most people want to see Google, and that's fine. So that's what we'll do. And then we'll probably cover both, to be honest. So we're going to try to cover both Google and Microsoft's earnings calls. And so, we'll hope that works. And again, hit the like button if you want to see us do that. All right, so we got a poll today. Are you bullish or bearish on today's tech earnings? Vote on that poll. Let us know how you feel. Most people are bullish. Again, Microsoft's starting to pop up. It's at 331s right now. Again, you can see Google on the left. Again, we're holding both of these, to be honest. What's up, Al? And again, even if you trade futures, these are going to have some influence, like over the futures market, without question. Like this is going to move the futures market to a certain extent, without question. Now, how much, we don't know. Remember, we got Jerome Powell Thursday. I don't think he can really say anything regarding rate hikes, but he might say something. We'll see. We'll try to stream that too. But again, no. So is Jerome Powell tomorrow? I think Jerome Powell actually might be tomorrow. Economic Club of London, New York. Yeah, I'm pretty sure Powell speaks again tomorrow. Right, so I'm pretty sure Jerome Powell speaks again tomorrow. Let me make sure. Yeah, so Powell has at 4:35 tomorrow the introductory remarks at the 2023 Moynihan Lecture in Social Sciences and Public Policy. So, but I think it's the blackout period. So I don't think he's actually going to be able to, I don't think he's actually going to be able to remark on public markets and what the expectation of that is. Although I'm really not 100% sure either way, to be completely honest. We'll see. No, Powell's tomorrow. And then the FOMC meeting is next week on Wednesday, but I'm not talking about the FOMC meeting. I'm talking about something else. So yeah, Meta earnings tomorrow. So maybe we can, it depends on what time Meta earnings are. Well, FOMC is November 1st, right? But that's not what I'm talking about. He does the opening remarks at one of the lectures in social science in Washington tomorrow at 4:35 p.m. Eastern time. So it's tomorrow afternoon. I'm trying to see what time. So Meta's earnings call is tomorrow at 5. So we'll see. Yeah, after hours Meta has earnings tomorrow. So yeah, we're watching it for sure. We just got to be smart. And again, we'll see what happens today. Vote on the poll. Looking at the poll, most people are bullish. 70% say bull, 12% say bear, 17% say neutral. We're going to do a Twitter poll. Yeah, thanks for hitting the like button, team. We appreciate it. We're gonna do all right, so we got the Google poll live if you want to vote on it on Twitter. And then we're also going to do a Microsoft one. All right, so we got 2 polls live on our beginner trading Twitter. It's at beginner trades. It's at beginner trades, TRADES. All right, so look at NVIDIA rip, man. Markets are pushing up heavy. You know, if you want to vote on the poll for, oh, here I got you. Here's the there's the vote right there. If you want to vote on the Google poll, you can beat or miss. We got individual polls for both Microsoft and Google. So let me know what you guys think there. Again, AI interest is going to be high today based off of all these numbers. And again, we do have some pretty big tech earnings this week, specifically not just today, but like tomorrow, Wednesday, Thursday, and Friday. We have oil earnings with like Exxon, Chevron, and some other stuff too. Rockets are going off overseas. All right, so BLK's iShare Bitcoin Trust has been removed from the DTCC Depository Trust and Clearing Corporation. Yeah, we got some votes, 4 votes, all for 100% on Google online. Maybe I should do one on So, what are your thoughts on Boeing earnings tomorrow? I think Boeing will be interesting. I mean, it's the biggest cap stock that drops earnings tomorrow. And outside of Boeing earnings, we really don't have much going on tomorrow in economic reports. You know, we got Boeing at 7:30. You know, later in the morning, estimates are losing $3.05 a share on 18.27 billion. You know, I think we should probably put up Google's expectations here as well. Google is expecting a $1.45 profit. Yeah, so a $1.45 profit per share EPS on a revenue of 75.91 billion. Microsoft is expecting 265 a share on revenue of 54.49 billion. All right, so I'll put this up on screen. Catch it. we're putting their expectations up on screen right there if you want to check out what everything's expecting today. So technically Google is scheduled for right at 4 p.m. on the dot. So Google is scheduled right at 4 p.m. on the dot. Microsoft is scheduled for 4:05. Snapchat, I believe, is scheduled for 4:10. Visa at 4:05. Teladoc at 4:05. Texas Instruments at 4:05. Or no, Texas Instruments at 4. Waste Management sometime after the close. They were ambiguous when the numbers actually come out. And that's basically it. I mean, we got like a couple other ones that you might hear about or might have heard about, but that's all the big boys today. Visa, Snapchat, Google, Microsoft, Teladoc, Texas Instruments, Waste Management, the big ones getting released. Both stocks are ripping up, including Google getting ready to test the high of the day up there at 140.7. Microsoft testing the previous high of the day is from pre-market, which is right around 333 or so, just underneath that. Google's high of the day is the one that made the push at about 10 o'clock market time or about 11 o'clock market time at almost 141 at about 140.75. But yeah, you can see Microsoft's margins are a little bit better than Google's, but that's okay. Yeah, so Meta's is tomorrow. Probably G. They're a full hour away from each other, so I could probably do it where we catch the Google call and focus on that as our priority and then pivot is the plan. I don't know. Last earnings, I think Microsoft did well. I think they reacted positive, but I might be wrong there. I'm not sure. Snap is like $9 forever. Yeah, I'm actually in Snapchat too. I'm green on my Snapchat trade. I'm in 30 shares though, so it's like a pretty small trade. I've been holding it, taking profit on it. My average is 920s, and we're at 980s right now. So I might take a little bit off, but keep most of it ahead of the earnings call today. Just because I'm up so much, I'm up almost 10% on the trade, even though it's a very small investment. But I'll hold it. I'm gonna let it sit. It's a small investment, and I can just kind of let it sit in Snapchat long term. Microsoft's last earnings was positive. However, earnings call made the stock collapse due to them admitting the next earnings report may not deliver positive results from what I heard. Yeah, it'll be interesting to see what happens. I'm staying on the sidelines. Hey, good luck. I take all that snap profit, but that's me. It's a very small amount. Like I'm in 20 shares. Again, for me, it's a trade where I'm okay with losing money, a small amount of money, which is going to be very small. Again, it's 20 shares, right? So even if Snapchat pushes up to $11 right now, I'm going to be up a little bit over $20. So if it drops down to $8 right now, I'm going to be down less than $40. So it's that's a small trade that I'm not super concerned with. If it rips up big, great, I'll make money. If not, all good. I'm not super concerned about it. Yeah, I don't know. That's the rumor, is that BLK is buying up the news, but they're buying up Bitcoin, but I don't know, man. Again, I've talked about this on the Top Step show. I'm going to say it here. It's risky right now in Bitcoin. The reason it's risky is because if this ETF does not get approved, bad stuff can happen. Like it can crazy dump. It can dump really, really quickly if this ETF does not get approved, right? So it's incredibly important that this thing gets approved, and that's a lot to rest on, I think, in my opinion. Let me know in chat. Do you guys think it'll get approved or not? Let me know. I know that's what's trending. Dude, did my headphones just die? What? Oh, it's all good. See, dude, honestly, these AirPods are freaking weird, man. So I'm just gonna swap out of these into these. We're back in. Oh, there we go. I'm sure y'all probably can't hear me, but it's all good. Let me fix this. Yeah, it said they were charged. Crypto is so sideways sketchy lately. I would think there's better things to mess with. I think it will, but I hope it's not, just because it would be funny to watch it implode. Microsoft definitely tanked last earnings. Why Bitcoin pump? Bitcoin's pumping up because everybody thinks that the spot ETF is going to get approved soon, right? So that's what's going on right now. Everybody thinks the spot ETF is going to get approved, and so, you know. Dude, are people still stuck in Pepe? Let me see the Pepe chart, bro. I mean, I could never imagine investing large sums of money in Pepe. The only people that are really stuck in Pepe right now are people who are probably down pretty big on it. It's up today. That's great. On the year, I mean, it's still green on the year, you know. It doesn't look. It's not. Honestly, I got to be real. It's not as bad of a chart as I might think it. As some of the other crypto I've seen. It's actually green over the last year, although it recently just got hype in March. It recently got another run, you know, but it's been on a pretty big downward slope. I hate crypto whose prices look like this because they just look sketch. Yeah, I mean, markets are looking much better here. The SPY, all the way at 424s right now. 424s on the SPY. Do you think Google and Microsoft is going to be bullish? I really don't know. I hope so. You know, I tend to be optimistic. I'd like the market to do okay. Like, I want the market to do well, but again, like, you never really know here. So while I want the market to do okay, you know, there's also a chance that it doesn't. You know, and again, I'm not going to worry too much about it either way. If the market doesn't push up, it's not like I'm going to be broke. I only invest money I'm okay with losing, and in the end, I'm mostly holding a lot of the stocks that I'm in, like Microsoft, like Google, for long-term investments. And so I'm only really sitting on these things long term. So like unless we get like a crazy spike up, I'm still just gonna stay in whatever I'm in, or a crazy spike down for that matter. But it would have to be really crazy to convince me to sell what I've got. So we'll see. Here. All right. All right, team. Yeah. I'm watching a lot of the drama on Twitter right now. It's actually pretty entertaining. We got about 200 people here. We still got 13 minutes until numbers come out. Again, looking at the votes, 66% of people are bullish. Positive vibes for those who are looking for green at the earnings. I hope it's green. I mean, but again, it's not. I'm not super extended in anything. Again, chat, let me know if you're bullish or bearish on Google right now. You can ask that question. Are you bullish or bearish on Google right now? Again, they all have AI potential. Like they all have AI potential. Again, slap the like button if you haven't already, guys. We appreciate it. All right, so here's the Donald Duck song. Again, we still got 11 minutes or so. Let me put a timer up to when all the numbers drop. So I'm going to put a timer up here. We got like, I'm going to call it 10 and a half minutes, which is probably about pretty accurate. All right, so 10 and a half minutes until Google is specifically scheduled to release. We also have Microsoft on the right. Vote on the poll as we approach these earnings. We'll see what we get, if we get anything good or bad. I took some hits today, so I'm going to chill, but hopefully others have a better day. Yeah, I mean, listen, that's kind of some days, Todd. I hope you're good, bro. What's weird is Apple not reporting same day as Meta. I mean, that's not usually how it goes. Like most of the time, it varies. To be honest, like a lot of the time, Google and Microsoft are same day, and usually I cover Microsoft. We're going to cover Microsoft today, but we might cover we might try to stream both earnings calls. Sydney, I'm not sure if you, I mean, yeah, I mean, Sydney, no offense, man. All good, Jonathan. What's up, bro? Sydney, man, listen. Sydney says, just so no one get confused, I believe Google has earnings and not Google. Not sure the difference, but I do believe there's a difference. I just don't want anyone confused going into a trade. So yeah, there's a difference, but they're both Google. Like they're both Google. There's not really much of a difference. One is Class A, I believe, and the other is Class C, right? So they're different type of shares, same company. Okay, so like the earnings call is going to be for both stocks, and they're both going to move from the earnings call. To be honest, if you look at the stocks, they're virtually identical. You know, one's just Class C, one's Class A. You know, just to put it into perspective. All right, so again, we got a little pullback on Google here. You know, basically, so the only main difference is that Class C shares are typically held by employees of the company itself, right? And they don't have any voting rights. Class A shares are typically held by investors, and they have regular voting rights, which is usually 1 vote per share. You know, compared to Class B, which typically get 10 votes per share. You know, so I just all in Google. Hope I don't go broke tomorrow. Hey, good luck, man. Yeah, I'm not sure if you're trolling me, CT, but I don't charge for any content, brother. Does Microsoft come out with earnings at the same time as Google? So they come in 5 minutes apart, basically. Like they're 5 minutes apart. What's up, T.O.? What's up, V? Yeah, investors are Class A, executives are Class B, employees are Class C. Is that? I'm pretty sure that's what it is. I might be off, but let me look this up. Yeah, so Class A and B shares differ in their availability, convertibility, and power, as like voting rights, basically. One isn't necessarily better than the other, but Class A shares offer significant benefit in the event of a sale or when an outside force wants to obtain more voting power, if that makes sense, right? And it's one of the reasons in that regard you can kind of see Google, GOOG, is actually a slightly more expensive than GOOGL for that reason, I'm guessing. But yeah, pull it back a little bit for GOOG. So here's Goog, like with no L, Class A. Here's Class C, right? So slightly less expensive Class C, but still basically the same price action, same thing. They're both Google. They're both going to move with the earnings calls and all that stuff. So 6 minutes, team. Hey, what's up, puppy? Do you think reports from Google can give us a glimpse of how Microsoft report would look like? I'm not sure. Yeah, I don't charge for anybody to watch anything on YouTube, CT. There's no video that you have to be a membership to watch or anything like that, man. So, I mean, you know, we don't charge for anything. Everything's completely free. You don't have to pay for anything. There's no paywalls behind any of our content. Even becoming a member doesn't get you anything extra. Like, there's no exclusive member videos or exclusive member streams. You know, it's all free. The only thing we sometimes do is we sometimes put it in sub only mode, so you got to subscribe, but that's free, you know, so you don't have to pay for anything. Okay, post it in Discord if that's what you see, CT. I'll look at it, unless it's like really old, you know. We don't charge for anything. Yeah, and again, I'm watching Google pull back a little bit. It's pulling back right back to that 200 EMA VWAP level. We'll see if it holds, but this is usually a pretty big support level pulling back to. We got 5 minutes before the earnings call starts. Yeah, for sure, charts. You know, some people just get weird, man. Like, you know how the internet is, bro. Like, people lose at trading, and a lot of people are just not very mature or like really introspective, and so they look for whomever to blame besides themselves. Is what happens. A lot of people. It's human nature. The people who usually succeed at trading are usually the ones that can like be accountable for losing, be accountable for their losses, and just kind of be accountable overall. Those are usually the people who fix their mistakes the fastest. The ones that usually don't fix their mistakes are those who kind of blame others for them. When the most people lose, like, it's nobody else's fault. I certainly am not in control of whether you guys win or lose. And I think the most effective traders are ones that recognize that and work on themselves. We got 4 minutes, team. 4 minutes. Yeah, I'm just trying to make sure it's not a scam. I'm not going to click on any link though, but send a picture if you want. We'll see. All right, guys. Hey, 3.5 minutes. We'll see if we get any good stuff. I'm skeptical about putting my money into Google or Meta until after the lawsuits. Yeah, I mean, the market's been crazy. And again, we have a lot of big earnings that drop. So look at that bounce right at the same spot we talk about. So there's Google right at 140. So we bounced directly off of that 140 level. And we're still bouncing up. We're at 140.3. Still trying to make the moves to see how much we can bounce. I didn't start out that way. I wasn't always supportive, but I learned over time to better my psychology. Part of this most of it is mental. 100%. Trading is purely a mental game, and it's difficult. And again, I'm probably one of the only dudes out here that will tell everybody, like, yo, you'll probably lose money at this. You know, like I went on Top Step TV earlier, and I said the same thing. I said a large majority of people lose money, like it's inevitable. You know, but most people lose, and that's okay. You know, that's part of it. Hey, man, thanks for your videos. Thank you, Roger. I appreciate it, brother. Thank you, man. Yeah, we might have a 3-year-old member video. That's from actually when Money Mitch used to run this channel with me. So, like, if you guys know Money Mitch over there at Benzinga, he used to own a piece of the channel, like a quarter of the channel, basically. And he eventually went his own way with Benzinga, but him, you know, still a good friend. Some of those old videos are from him and I when we first started making content back in the day. Anyways, we got 2 minutes left. 2 minutes. Free BJJ. I'm not good enough to teach you jujitsu. I'm okay. I could probably teach you some stuff, but like basic stuff, and I don't even know if I'd teach it right. Like I'm all right at jujitsu. Like when we roll, you know, I think I'm one of the good white belts there, but I'm still a white belt, you know. And so I don't know if I'm good enough to teach anybody anything, you know. I'll tell you this though, I've got a good guillotine. Like the guillotine's the one move I catch everybody with, you know. Anyways, Google's starting to push up. We're almost at 139. Again, we did bounce right at that spot. So again, look at that 200 EMA VWAP level. It's right there at 140. We'll see if we get a pop. We got 1 minute before the earnings drop, guys. 1 minute. Google's scheduled to drop theirs right at 4 p.m. And then Microsoft scheduled for 4:05 p.m. So 5 minutes. 5 minutes later. I don't know. Google has its own AI Bard, and it's pretty solid. Like Google Bard's actually arguably better than ChatGPT in a lot of ways, in my opinion. And so it really depends. Like Google Bard's pretty solid. You know. So like Bard's pretty solid. But here's the earnings release. They're dropping right now. Make sure you hit the live bet. Make sure you hit the live button next to the play button. Make sure you're fully caught up. We got the numbers dropping. I'm going to pause this timer, and then we're going to wait for the actual numbers to drop. OpenAI customers such as Morgan Stanley, Wix are buying AI through Microsoft to keep much of the revenue. All right, guys, here we go. Here's the earnings. Watch for big increases at the opening bell. Watch for big volatility here. All right, here's Google on the left, Microsoft on the right, and then we're also going to watch Snapchat as well for volatility. We're also going to throw it in sub-only mode, so if you have not already subscribed, we appreciate it. All right, so there's the close. Watch for volatility here on Google. Nothing yet on Google. Watch for Microsoft. Nothing yet on Microsoft. Watch for Snapchat as well. Patiently waiting here. Patiently waiting. Again, nothing really out yet for either one, Google or Microsoft. Patient. You'll see them when they move. Okay, wait, there's Google. Google bounced it up a little bit. It's at 147, these guys. So Google might have released. So is Microsoft. Microsoft just ripped up. Look at Google and Microsoft. I don't know if this is sympathy with each other. They're both flying up right now, both Google and Microsoft. I'm seeing AI news and Microsoft, but I don't see any Google news yet. But look, there's Microsoft up there to 338s. Bear with me. Pun intended, I guess. Checking Microsoft because it looks like it moved first. Microsoft first quarter EPS of $2.99. Microsoft first quarter more personal computing revenue. Again, $2.99 versus $2.65 estimates for Microsoft. So Microsoft had better than expected EPS, better than expected rev, $2.99. Again, Microsoft $2.99 EPS versus $2.65 revenue of $56.5 billion versus $54.5 expected. So higher than expected on both for Microsoft here. You can kind of see Microsoft's numbers right there. We're waiting for Google here. It looks like Google's just moving up in sympathy for Microsoft, but we're still waiting on Google's numbers here as well. Again, we got all the numbers up. There's Google. Google with a big drop here, guys. So there's Google with a big pullback here. Google's numbers must be out already. Let's see if we can find anything. Texas Instrument numbers are out as well. I'll put those numbers up in chat. It looks like Google numbers are out as well. Big drop for Google. It's falling fast right now. Falling fast for Google. Let me see if I can find the Google numbers real quick. Yeah, Google, everybody's still waiting for Google. So it looks like the numbers are out, but we just haven't seen them yet. All right, Google's out. Google posted third quarter revenue of $64.05 billion. They expected $63 billion. Third quarter EPS of $1.55. They expected $1.45. So better than expected EPS and sales. I don't know why Google's down so much. It's at 133s right now. Team 133s. It's a big dip. But they beat on both metrics. I'm not sure why Google's so underwhelming here. We'll put both of these numbers up on screen so you can see them right here. Again, I don't know why they're down so much, but again, here's both stocks right there. Google falling down, reacting really negatively to their earnings. Microsoft reacting really favorably to these earnings. And again, I'm holding both these stocks. So again, they're kind of canceling each other out. Google all the way down to 131s. Microsoft up to 346. Polar opposite movements here for these. Snapchat releasing their numbers. Snapchat down big. Luckily, I'm still green on the trade. It's a very small trade, but I'm not sure what's going on with Snapchat either. Getting ready to report those. Snapchat down to 904s. Google all the way down at 131s here. Yeah, so Google here, just to give you the numbers. Google posted EPS of 155, ad revenue of 7.95, net of 19.69 billion. Operating margin is 28%. Operating income is 21.34 billion. Revenue is 76.69 billion. Google services revenue for the third quarter came in at 67.99 billion. Traffic acquisition costs came in at 12.64 billion. Other bets revenue came in at 297 million. I'm going to put a lot of these numbers up in chat so you can kind of catch them. So you can kind of see what's going on here. Posting all these right now. Chat, so you can kind of look at what the margins actually are. Yeah, I don't know why Google's down so much. Microsoft's up a lot though, which is good, you know. It's good Google bounces back up. Sometimes I buy the dip in these. So I'm going to buy a little bit. Add a little bit more, I mean. Fix my average some. Got a pretty good average down here, to be honest. And Google. Again, Microsoft at 346s. All right, so we bought the dip on Google. Snapchat already bouncing back. Let me see what Snapchat numbers are. It looks like Snapchat's out. What do you guys think of these? Snapchat numbers aren't out with Snapchat's technically scheduled for 10 or for 410, but Snapchat's super volatile. I don't know what's going on with this. Microsoft's still pulling back some. I don't see Google guidance anywhere. So again, I don't see guidance for Google anywhere here. Yeah, let me Google why Google's down. All right, so I bought the dip on Google, and it looks like it's treating me well here. That's cool. Microsoft's still up pretty big. Google bouncing back. Again, we added on that dip for Google. And we're now green on the day again. That's nice. No, Google beat on both metrics. Google came in better than expected. We'll put some of these numbers up. In revenue, their revenue was higher than expected. Their EPS was higher than expected. Maybe traffic acquisition costs coming in at 12.64 billion caused it to correct. Look at Microsoft with the pullback as well. Google's starting to bounce back. Snapchat's still waiting for their numbers to drop in about 3 minutes here for Google. Or for Snapchat. Snapchat's numbers about to drop in about 3 minutes. Yeah, I don't see any guidance for Google. I'm going to eat Wagyu now. Hey, good luck. Yeah, remember, subscribe here, team. We cover all this stuff live as it happens. And then we still got the earnings call going live pretty soon. Snapchat's still tearing up here. We got 2 minutes before they're going live. What happened? Yeah, what happened is that they came in both much better than expected. Both Google and Microsoft beat pretty heavily on both metrics, EPS and revenue. EPS was higher than expected. You can look at some of the quotes from the CEO. He said, pleased with financial results and products this quarter with AI-driven innovations across Search, YouTube, Cloud, and Pixel. So that was the statement by the CEO so far. We got the actual earnings call going live in about 20 minutes or so. Visa also reported. So Visa also reported numbers that you can see here. You can see Visa's numbers there. All right, team. So we got Microsoft numbers out. We got Google out. We got Snapchat coming pretty soon. All right, Microsoft still looks like it wants to head up. And again, Google's still reeling back from its initial pullback and then bounce. Look at Microsoft starting to test these upper ranges at 248 here. So Microsoft all the way at 248s right now. Again, we got the call coming out in about 20 minutes here. I'm going to put the timer up as well. So, yeah, so again, we got the earnings call live, 4:30. You can subscribe to chat if you want. All right, guys. So Almost here. Shorten this a little bit. There we go. So we got the full call going live, team, in about 20 minutes here. Let's put the timer up. Really, we got about 18 and a half minutes. And Microsoft's still turning up here. Look, breaking the 248 high, right around 250. Let's watch 250. It seems like a pretty big psychological level here. Snap earnings just dropped, so let's see what Snap earnings are. Snap came out at 2-cent profit per share. They expected a 4-cent loss per share. I'm sure Snap is flying up on this report. Yeah, look at Snap. Hey, you love to see it. Hey, I told you guys. I was in Snap, although it's tiny. But here, the Snap numbers are on screen. Look at Snapchat rip up here, guys. So look at Snap. Snap up to 12s. 1150s here. Might as well take a little piece of it off, huh? We're up so much on it. We might as well, right? Google looking rough, but that's okay. Microsoft's going to pull a Netflix over the next week. We'll see. You're so fast with the info. Yeah, we try. You know, we don't get everything right, but we try. I wanted to buy Stab, but I didn't. Yeah, that's how it goes. Don't have too much FOMO, though. There'll always be another shot at something, man. So just don't take too crazy of risks. Yeah, you'll have another shot, man. I wouldn't panic, man. Snap dipping already. Yeah, we already got out of a piece. We'll hold the rest. I mean, again, it's such a small trade. If Snap ends up really being successful, we'll make money, and if not, it's not the end of the world. Microsoft's still pumping up here. Microsoft at 350s right now, so Microsoft's ripping up. We'll see what the earning call looks like in about 15, 20 minutes. I see a video called How Judo Drastically Improves Your Jiu-Jitsu Game. Honestly, dude, I rolled yesterday, bro, and I just got judo through over and over and over again. It was no fun at all, bro. You know? Like, my one move is waiting for them to shoot in for a single leg so I can guillotine them. And, like, when they're judo throwing me, it doesn't even matter. I can't even get close to it. And I was rolling with, like, a purple belt. I think he's almost a brown belt. And, like, bro, this dude was just flinging me. I ended up rolling with the black belt coach. And, like, this dude did, I think it was called a twister throw. Let me see. A tornado throw, actually, is what it was called. A tornado throw on me. That thing hurt. It was fun, though. I laughed about it, but still. Let's see what this thing looked like. How did Google and Microsoft do? They both did better than expected. Google just reacted negatively, but it still beat. Google beat on both EPS and sales. Microsoft beat on EPS and sales. They're both pulling back now. I don't know why Google reacted so negatively, though. Amazon earnings are tomorrow. Wins and phase earnings, I'm not sure. I don't know why Google's down. Again, 15 minutes. Snapchat beat on both EPS and sales. It's up to $11 a share. So again, Snapchat, the numbers are right here. I posted them in chat. Let me find them. Yeah, so here's Snapchat numbers right there, like right below me. I'm gonna zoom in on the screen too. So yeah, here's Snapchat numbers right here. And again, you can see Google right here, Google, the one right there to the left, and then Microsoft. You know, Microsoft is right here. You know, so there's Microsoft. Again, Google's over here. Microsoft is over there. And yeah. Again, Microsoft down a lot over the last 5 minutes, but it's still up pretty big relative to where it was prior to the earnings release. They both beat. Again, Microsoft posted EPS of 260 or 299. They expected 265 and revenue of 56.5. They expected 54.5. Google posted 155 EPS on 145. Again, EPS is profitability. It's earnings per share. It's a gauge on how profitable the company is. It's their margins. Revenue is their potential, like their ceiling, like how much money they're bringing in. EPS is their actual margins behind it. And so, yeah, I mean, again, you can kind of see both of these. Google testing lows now. Microsoft pretty high up there. It's at 346. Yeah, Google's calls at 4:30. So yeah, Google's calls in 12 minutes, as you guys can see. Microsoft's call is at 5:30. So Microsoft's call is in over an hour from now. That's what I'm saying. That's why I'm covering Google here, and I'll probably cover Microsoft too if the Google call ends enough. But right now, you know, it's just too freaking long, bro. Again, Google up there at 132s. Yeah, Google's calls in 12 minutes. Meta and Amazon. Yeah, Meta's tomorrow. Amazon's Thursday. Google's cloud revenue probably needed to be higher to pay for aging infrastructure replacement. Maybe. Rotating my money from Microsoft to Google at 130 a share. Good luck. I think Microsoft took Google client. Maybe. Google was sitting at a 52-week high and had to pull back. Yeah, for sure. I know Google's been performing well for sure on the year. If you look at Google on the year, it's up a ton. I mean, Microsoft's up even more on the year because of earnings from AI specifically. You know, Microsoft opened up the year at 244s. It's at 344s right now, 345s. Google opened up the year at 120s. It's at 140. So Microsoft's definitely had a bigger percentage gain. You know, realistically, Microsoft's up 100% since the year. You know, Microsoft was at 213s. And so, Microsoft's up 50%. I'm sorry. So Microsoft's up 50% on the year. 50% of Microsoft's about at the beginning of the year at 200 and 220. So yeah, Microsoft's had a pretty good loot. I'm looking at the lows at 213, but Microsoft's had a really good year. Google is up like let's see. So Google started the year off at 125. It's at 140, so it's a $15 increase. So 15. Google's up 20%, 25%. Microsoft's up a little bit more. So Microsoft's having a bigger percentage year than Google, but they're both having pretty good years. But that's not including how much they were down. Like a lot of these were down already. Like Google, if you look at the last 2 years, the percentage increase is different because again, the last 2 years, Google in February of last year was at 150. It's still not over that. So it's still down over the last 2 years, but we've just had a big comeback here this year specifically. 10 minutes, guys, 10 minutes. Yeah, Meta's tomorrow, Amazon's Thursday. Yeah, so Google's cloud revenue came in at... All right, so again, we got some updates on Google, okay? So Google cloud revenue is at 8.41 versus 8.63 expected. So their cloud revenue was lower than expected here, just to give you guys the updates on this, right? So this is why Google's underwhelming reaction. So the CFO said they're going to continue to focus on judicious capital allocation to deliver substantial or sustainable financial value, and that fundamental strength is apparent again in the third quarter with $77 billion in revenue, up 11% year over year, driven by meaningful growth in search and YouTube and momentum in cloud. Yeah, in January, they announced reduction of workforce for Google and Alphabet. They recorded employee severance and related charges of about 86 million and 2.1 billion for the 3 and 9 months ended September 30th, respectively. In addition to exit charges for 3 and 9 months ending in September 30th, incurred 207 million in accelerated rent and accelerated depreciation. They may incur additional charges as we further evaluate real estate needs, and that they're taking actions to optimize global office space, as well as exit charges recorded during the 3 and 9 months ending in September were 16 and 649 million, respectively, according to Google. So that is what's going on with Google. Cloud revenue disappointed slightly. That was enough to trigger a pretty negative reaction for them. Although it's not the worst reaction I've ever seen. And again, Google's already having a pretty good year, to be honest, already. And again, earnings call starts in about 8 minutes, team. 8 minutes for Google earnings. All right, let's go. All right, guys, we got 7 minutes, 7 minutes. Did you look into Visa earnings? Yeah, Visa already reported. We covered them already. Visa reported. Ooh. Okay, so we do have some news here regarding the BLK numbers here. Sorry, guys, this distracted me. So the U.S. SEC says it charges BlackRock with failing to properly disclose investments by publicly traded fund and advised. BlackRock hasn't moved at all. Bitcoin specifically. When did this come out? Bitcoin's still doing okay. And again, Visa's already out with theirs. Visa posted 233 versus 224, so a slight beat in EPS. Revenue of 8.6 bill versus 8.55 billion expected. They authorized a new 25 billion multi-year share buyback program. So Visa with a buyback program, I'm sure they're up some on that. Yeah, Visa's up to 240s right now. Yeah, we'll probably cover the Microsoft call, but the Microsoft call is not for another hour and 10 minutes. So we'll probably cover Google and then pivot to Microsoft is what we'll probably do. Somebody's saying I'm muted. Y'all can hear me, correct? Yeah, y'all can hear me. Yeah, Snap. Again, we took a little bit off Snap, luckily. Microsoft's starting to bounce back a little bit. Snap all the way back down to 1030s. Yeah, we hear you. Okay, I figured. Again, if you haven't already, check out TopStep, funded account program. If you want to day trade, the S&P 500 and the NASDAQ are futures contracts that you can trade. So you can day trade the S&P, day trade the NASDAQ, basically day trade the SPY and day trade the Q in futures, no PDT rule. You can day trade short, buy market, sell market, all that good stuff. No PDT rule in futures. You can also day trade gold, silver, all this different stuff, currencies, no PDT rule. And the pattern in the S&P and the NASDAQ are very similar to large cap stock patterns. And so if you want to get exposure to day trading stocks, futures probably what you want to use. And my sponsor is TopStep, but one of my sponsors is TopStep. They give you a demo and they test your skill. So if you can pass their challenge, they're going to give you a 50K demo or 150K or 100K demo, depending on which one you choose. If you can make their profit target without making their max loss, without hitting their max loss, they fund you the same amount. So the base one's 50K. If you could pass it, you get 50K in funding with a 90% split. It's a great way to limit your risk when you're learning how to trade. But also, if you lose, it's not the end of the world. So if you're good enough to pass it, you get 90% split once you're funded. So if you can get funded, you get a 90% split. And it's a 2-to-3 ratio. The base one, you got to make 3 without losing 2,000. Reasonable. Verify this all with them, but they're a sponsor of mine, so I'm biased in their favor. But it's a great way to learn day trading with less risk. And if you want to check it out, here's the link. I'll put the link up on screen. Again, they are a sponsor of mine. I'm definitely biased, of course, because they pay me money. And so I'm certainly biased in their favor. Check them out. Yeah, I figured I wasn't muted. All right, guys. Hey, the earnings call starts in 5 minutes. 5 minutes. Will it be good or bad? Red or green? Let me know what you guys think. We got this poll. 64% are bullish here. Guys, 64% are bullish. Again. All right, so we got a bull or bear vote on the poll. Bull or bear, bullish or bearish on Microsoft's earnings call. There's the link right there. Let me know how you feel. Again, I got to switch out my headphones. Alright. Can you all hear the music right now? You should be able to hear the music. Let me know if you can. Um, you guys ready? I want that earnings call. All right, so this is quarter one. Let me see. So this is quarter three. Here we go.
Or 4.
What a terrible hold music. All right, we're in the earnings call right now for today, October 24th, 2023. 3 minutes. Yeah, the music's not supposed to be loud. I can turn it up if you want. I'm just trying to make sure y'all can hear it. Y'all can hear that, correct? I just turned it back down, but y'all can hear that. I just want to make sure you'll be able to hear the earnings call loud and clear. I'll turn the earnings call up when we get it. It starts in 7 minutes exactly here, team. 7 minutes. You said if Snap drops to 8s and goes to 12s, it doesn't matter. Well, it did both. Yeah, for sure. Yeah, it did. It almost did both. It's at non-50s right now, but hey, you're right. Again, I'm cheap enough to where that doesn't matter too much. Again, we're pretty green on the day. I mean, again, we were red yesterday, and so some of these positions we're still red on, but like our equities position, we're up about 525 on the day. So like equities are doing it. I gauge my equities by my positions too. All right, guys. Here we go. Google earnings call starts pretty soon. Get ready. Again, sound check. Y'all could hear the music, correct? This is Google, Lynette. We'll probably switch to the Microsoft one when they start. Okay, good. You can hear. They've been Watch Geek says they can hear. Microsoft, I'm bullish on Nvidia and Tesla. That's about it. However, we're gonna move everything to cash tomorrow and wait for Thursday. Yeah, Amazon on Thursday is the big one, Nicholas. So Amazon drops Thursday. Again, we'll see Meta's tomorrow, Amazon's Thursday, and then next week we got. I have to go back and check to see what drops next week. We got Chevron and some other oil plays. Friday, Pinterest is next week. Pfizer, Caterpillar, looks like some industry ones. McDonald's, SoFi, Western Digital. Got a bunch of small ones that drop. Pinterest. All right, guys. Hey, we got a minute and a half, minute and 20 seconds, really. Hit the live button next to the play button. Make sure you're fully caught up on stream. It'll make sure you're actually live. JetBlue, Caterpillar, Anheuser-Busch. Thursday, we got AMD, so we'll probably stream that one. Amgen, Green Brick, Paycom, Caesars, First Solar. And then Wednesday morning, we got like Norwegian Crude, Kraft Heinz. All right, guys. Hey, we got less than a minute. So we'll see Google. Again, we'll see if they say anything positive that helps them. I'm going to start Xing out of this stuff. And I'm also going to mute the music so that I can fully hear when the actual earnings call starts. So you're not going to be able to hear the music. I got their terrible hold music on hold right now. So, all right, guys, we got Google earnings call starting in 20 seconds or so. Thursday morning, the Fed puts out their annualized GDP. Yeah, I think they're expecting something crazy like 4.2%. We're going to stream at 8:30. So if you subscribe and hit the notification bell, you'll get alerts when we go live. And again, we will stream at 8:30 like we always do. And then we also have PCE on Friday. All right, so listen, once the stream starts, we're still waiting for it to start. They're usually about a minute late for these earnings calls. Once it starts, just tell me yes, you can hear. Say sound check, good, sound good, or whatever. You're not going to be able to hear it right now. We're just waiting for it to start. Yeah, Amazon earnings are next week's for sure. That's the big one next week. All right, we got the terrible hold music here. We're waiting for the call to start. Yeah, Snapchat just turned again. I'm glad I took a little bit of profit off at the top. We're still waiting for the Alphabet earnings to start. We're live, we're waiting. Sound is fully up. I'm listening to their terrible hold music, so just bear with me. I see. Yeah, we're waiting for it to go live. Yeah, terrible hold music. Calls in progress. Hit the sub button, hit the notification bell. We appreciate it. All right, here we go. It looks like they're about to start.
At this time, all participants are in listen-only mode. After the speaker presentation, there will be a question and answer session. To ask a question during the session, you will need to press star 1 on your telephone. I would now like to hand the conference over to your speaker today, Jim Friedland, Director of Investor Relations. Please go ahead.
Thank you. Good afternoon, everyone, and welcome to Alphabet's third quarter 2023 earnings conference call. With us today are Sundar Pichai, Philip Schindler, and Ruth Porat. Now I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance may be considered forward-looking. Such statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Form 10-K, including our risk factor section, and our Form 10-Qs. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. Our comments will be on year-over-year comparisons unless we state otherwise. And now, I'll turn the call over to Sundar.
Thank you, Jim, and hello, everyone. I'm pleased with our business results this quarter, which demonstrates strong growth in search and YouTube and momentum in cloud. Google turned 25 in September, which offered an opportunity to reflect on our progress over the last quarter century and to look ahead to the opportunities enabled by AI we are so excited and confident about. Our product momentum continued this quarter, as you saw with Cloud Next, Made on YouTube, and Made by Google. It's all part of our focus on making AI more helpful for everyone, and we are making good progress across the 4 areas that we shared last quarter. First, improving knowledge and learning. This includes our work with the Search Generative Experience, which is our experiment to bring generative AI capabilities into search. We have learned a lot from people trying it, and we have added new capabilities like incorporating videos and images into responses and generating imagery. We've also made it easier to understand and debug generated code. Direct user feedback has been positive, with strong growth and adoption. In August, we opened up availability to India and Japan, with more countries and languages to come. As we add features and expand into new markets, we are engaging with the broader ecosystem and will continue to prioritize approaches that add value for our users, send valuable traffic to publishers, and support a healthy open internet. With generative AI applied to search, we can serve a wider range of information needs and answer new types of questions, including those that benefit from multiple perspectives. We are surfacing more links with SGE and linking to a wider range of sources on the results page, creating new opportunities for content to be discovered. Of course, ads will continue to play an important role in this new search experience. People are finding ads helpful here, as they provide useful options to take action and connect with businesses. We'll experiment with new formats native to SGE that use generative AI to create relevant, high-quality ads customized to every step of the search journey. The second area we are focused on is boosting creativity and productivity. Bard is particularly helpful here. It's a direct interface to a conversational LLM, and we think of it as an early experiment and complementary experience to Google Search. Bard can now integrate with Google Apps and Services, showing relevant information from Workspace, Maps, YouTube, and Google Flights and Hotels. We've also improved the Google It feature. It provides other sources to help people evaluate Bard's responses and explore information across the web. Earlier this month, we announced Assistant with Bard, a personal assistant powered by generative AI. It combines Bard's generative and reasoning capabilities with Assistant's personalized help. You can interact with it through text, voice, or images, and in the coming months, you'll be able to opt in on Android and iOS mobile devices. Our collaborative tools in Workspace and YouTube are also part of how we boost creativity and productivity, and they are seeing great initial traction. Third, we are enabling developers, businesses, and other organizations to build their own transformative products and services. For example, thousands of customers and partners are already using Google Cloud to capture the potential of AI, and we'll share more there in a minute. And fourth, we are building and deploying AI responsibly so that everyone can benefit. One area we are focused on is making sure people can more easily identify when they are encountering AI-generated content online. Using new technology powered by Google DeepMind SynthID, images generated by Vertex AI can be watermarked in a way that is invisible to the human eye without reducing the image quality. Underlying all this work is the foundational research done by our teams at Google DeepMind and Google Research. We are excited to roll out more of what they've been working on soon. As we expand access to our new AI services, we continue to make meaningful investments in support of our AI efforts. We remain committed to durably re-engineering our cost base in order to help create capacity for these investments in support of long-term, sustainable financial value. Across Alphabet, teams are looking at ways to operate as effectively as possible, focused on their biggest priorities. Turning next to YouTube, which saw solid momentum in both its ads and subscription businesses in Q3. NFL Sunday Ticket is now live and receiving excellent reviews. Fans love our multi-view feature, which can live stream up to 4 games on a single screen. We have heard positive feedback from our partners at the NFL about the new features and live stream reliability. This is a clear example of our ability to execute big partnerships with excellence and at scale. I'm really pleased with the growth and engagement on YouTube Shorts. We continue to work on closing the monetization gap here. Shorts now average over 70 billion daily views and are watched by over 2 billion signed-in users every month. At Made on YouTube in September, we announced new tools that make it easier to create engaging content. Dream Screen is an experimental feature that allows creators to add AI-generated video or image backgrounds to Shorts. And YouTube Create is a new mobile app with a suite of production tools for editing Shorts, longer videos, or both. Next, Google Cloud. We see continued growth with Q3 revenue of $8.4 billion, up 22%. Today, more than 60% of the world's 1,000 largest companies are Google Cloud customers. At Cloud Next, we showcased amazing innovations across our entire portfolio of infrastructure, data and AI, workspace collaboration, and cybersecurity solutions. We offer advanced AI-optimized infrastructure to train and serve models at scale. And today, more than half of all funded generative AI startups are Google Cloud customers. This includes AI 21 Labs, Contextual, Elemental Cognition, Rider, and more. We continue to provide the widest choice of accelerator options. Our A3 VMs, powered by NVIDIA's H100 GPU, are generally available, and we are winning customers with Cloud TPU v5e, our most cost-efficient and versatile accelerator to date. On top of our infrastructure, our Vertex AI platform helps customers build, deploy, and scale AI-powered applications. We offer more than 100 models, including popular, third-party, and open-source models, as well as tools to quickly build search and conversation use cases. From Q2 to Q3, the number of active generative AI projects on Vertex AI grew by 7x, including Highmark Health, which is creating more personalized member materials. Duet AI was created using Google's leading large foundation models and is specially trained to help users to be more productive on Google Cloud. We continue expanding its capabilities and integrating it across a wide range of cloud products and services. With Duet AI, we are helping leading brands like PayPal and Deutsche Bank boost developer productivity. And we are enabling retailers like Aritzia and Gymshark to gain new insights for better and faster business results. In fact, companies are increasingly using AI for the purpose of analyzing data, and customers are choosing Google Cloud because we are the only large cloud provider with a unified platform to analyze structured and unstructured data. In Workspace, thousands of companies and more than 1 million trusted testers have used Duet AI. They are writing and refining content in Gmail and Docs, creating original images from text within slides, organizing data in sheets, and more. These innovations enable us to provide new services and grow our base of 10 million paying customers, including enterprises like Grupo Boticário, Unilever, and Warner Music. We also integrated Duet AI across our cybersecurity portfolio to differentiate in the marketplace, providing generative AI-powered assistance in Mandiant threat intelligence, Chronicle security operations, and Security Command Center. This reduces the time security teams spend writing, running, and refining searches by 7 times. We are the only leading security provider that combines frontline intelligence and expertise, a modern security operations platform, and a trusted cloud foundation, all infused with generative AI, helping protect customers and partners like BT, Jack Henry and Associates, and Cover My Meds. Turning to hardware, we unveiled our new products this month. We introduced our new Pixel 8, Pixel 8 Pro, and Pixel Watch 2 to very positive consumer feedback and reviews. Pixel is the fastest growing smartphone brand in our top markets and the only one that grew in units sold year over year. Our portfolio of Pixel products are brought to life thanks to our combination of foundational technologies, AI, Android, and Google Tensor. Google Tensor G3 is the 3rd generation of our tailor-built chip. It's designed to power transformative experiences by bringing the latest in Google AI research directly to our newest phones. And new AI-powered editing features in Google Photos on Pixel 8 and Pixel 8 Pro remove distractions, generate the best shot from multiple images, and reduce distracting sounds in videos. Pixel and our third-party ecosystem are powered by Android. We just released Android 14 with more accessibility features. I also want to mention Chromebooks Plus, a new category which provides the best of Chrome on great hardware, with built-in Google apps and powerful AI capabilities. We also shared that Chromebooks will now get regular automatic updates for 10 years, more than any other operating system. In other bets, Waymo is onboarding more riders to its commercial ride-hailing service as it gradually adds over 100,000 people from its San Francisco waitlist. Austin will follow as its next ride-hail city. Wing and Walmart announced a new partnership to provide drone delivery service in the Dallas-Fort Worth area. Before handing over to Philip, I want to thank our employees around the world who are working to create innovative products and provide great services to people and businesses who use our products. Philip.
Thanks, Sundar, and hi, everyone. I'll start with our performance for the quarter and then give color into the 3 key priority areas for ads: Google AI, retail, and YouTube, that we've identified on past calls as opportunities for long-term growth in advertising. Google Services revenues of $68 billion were up 11% year-on-year. In Google Advertising, Search, and Other, revenues grew 11% year-on-year, led by solid growth in the retail vertical. In YouTube Ads, revenues were up 12% year-on-year, driven by growth in both brand and direct response. In Network, revenues declined 3% year-on-year. Google Other revenues were up 21% year-on-year, led by strong growth in YouTube subscription revenues. Let's start with Google AI. Recent dramatic advances in everything from foundational research models to LLMs to generative AI are improving our ability to deliver better performance and profitability for advertisers and more helpful, delightful experiences for users. We covered many innovations last quarter after GML, like our conversational experience in Google Ads, significant updates to Performance Max, and new campaign types like Demand Gen. And as Sundar said, we're continuing to experiment with new ad formats on SGE. It's extremely important to us that in this new experience, advertisers still have the opportunity to reach potential customers along their search journeys. I'll highlight more ways we're innovating with the best of Google AI as we double-click into our core business. In retail, we had a great quarter. In a market where every dollar counts, our proven AI-powered solutions like Search and PMax are helping retailers drive reliable, strong ROI and meet customers wherever they are across the funnel. In Q3, we also started prepping retailers for what will be a long holiday season. Let me share some themes. Number one, with a maximum number of days between Thanksgiving and Christmas and expectations for many micro peaks beyond Cyber 5, we're arming businesses with insights and planning tools, including OptiScore and Performance Planner, to uncover new opportunities, plan budgets and targets to stay competitive and be smarter with their inventory and pricing strategy. Number two, consumer expectations are shifting, especially around price and convenience. We've seen 4x deals queries during the holidays versus other periods. 75% of users say they'll shop with those offering free shipping. Retailers are capitalizing on these trends with our differentiated merchant offerings like merchant promotions and fulfillment options. And we're making improvements to significantly boost the number of deals shown to shoppers in search this holiday season. Look out for more in the coming days about new ways we'll help shoppers browse deals across the web this year. Number three, no surprise, omnichannel is the way to succeed. With our suite of omni-product solutions, including local inventory ads, omni-bidding, and PMax for store goals, retailers big and small are capturing demand and incremental store budgets while engaging with high-value customers. Innovation continues across our shopping and merchant experiences powered by Google AI. Our virtual try-on tool for apparel launched in June and has been a hit with consumers and brands. Users engage with virtual try-on images at a higher rate versus regular brand-provided images. Product Studio is another launch from GML getting positive feedback in pilot mode. It uses the best of Gen AI to help businesses create unique and tailored imagery for free that they can then scale across their channels. We're seeing early merchant testers using it to seasonalize their content for the holidays. Let's shift to YouTube. It's worth repeating, our intense focus on creator success coupled with our multi-format strategy are at the center of how we think about YouTube's long-term growth. Shorts, connected TV, and our subscription offerings are key drivers here, and we're investing across each to solidify YouTube's position as the best place to create, the best place to watch, and the best place to deliver results. Sundar mentioned watch time and engagement momentum on Shorts, as well as our monetization progress. He also covered subscription growth and NFL Sunday Ticket. As for connected TV, we continue to be the #1 overall streaming destination according to Nielsen. 150 million plus people are watching YouTube on CTV screens every month in the US. Whether it's music videos, NFL Sunday Ticket, free movies, shorts, a continuous stream of Mr. Beast, or some other creator-led content, viewers want choice and variety, and we're giving it to them all in one place. And to help creators and advertisers connect with these billions of viewers across moments, screens, and formats, we're bringing Google AI to awesome new creation tools and ad solutions. AI will do wonders for creation and storytelling. From Dream Screen and YouTube Create, which Sundar talked about, to features that audit up content in multiple languages, flip and trim existing assets, remix and clip videos, and more, we're just getting started. We're also helping brands break through at speed and scale across the funnel to drive results. Spotlight Moments launched last week. It uses AI to identify trending content around major cultural moments for brand sponsorship opportunities. There's video reach campaigns, which are expanding to in-feed and shorts and will be generally available in November. AI is helping advertisers find as many people as possible in their ideal audience for the lowest possible price. Early tests are delivering 54% more reach at 42% lower cost. And then with video view campaigns, AI is serving skippable ads across in-stream, in-feed, and shorts, and helping advertisers earn the maximum number of views at the lowest possible cost. So far, they're driving 40% more views on average versus in-stream alone. Then for YouTube and other feed-based services, there's our new demand gen campaign, which launched in April, rolled out worldwide last week, and was designed for the needs of today's social marketers to engage people as they stream, scroll, and connect. It combines video and image ads in one campaign with access to 3 billion users across YouTube and Google, and the ability to optimize and measure across the funnel using Google AI. Demand gen is already driving success for brands like Samsung and Toyota. Before I wrap, one quick highlight on our close collaboration and commitment to our most important ecosystems and partners. In July, we launched Google News Showcase in the US, our curated online news experience and licensing program with more than 150 news publications, 90% of which are local or regional. Globally, over 2,500 news publications have signed on to News Showcase, and the product is live in 23 countries today. Our commitment to open access to news and information remains strong. With that, I'll end with a thank you to our customers and partners around the world for their continued trust and collaboration, and our Googlers everywhere for their incredible hard work and dedication. Ruth, over to you.
Thank you, Philip. We are very pleased with our financial results for the third quarter, driven by meaningful growth in search in YouTube and momentum in cloud. My comments will be on year-over-year comparisons for the third quarter unless I state otherwise. I will start with results at the Alphabet level, followed by segment results, and conclude with our outlook. For the third quarter, our consolidated revenues were $76.7 billion, up 11% in both reported and constant currency. Search remained the largest contributor to revenue growth. In terms of expenses, total cost of revenues was $33.2 billion, up 7%, primarily reflecting other cost of revenues of $20.6 billion, which was up 6%. Growth here was primarily driven by content acquisition costs, mainly for YouTube subscription offerings. As noted in our earnings release, the overall increase in data center and other operations costs was partially offset by a reduction in depreciation expense due to the change in estimated useful lives we made starting in the first quarter of the year. Operating expenses were $22.1 billion, up 6%, reflecting the following. First, an increase in R&D expenses, driven primarily by compensation. Second, an increase in G&A expenses, reflecting the impact of charges related to legal matters. And finally, sales and marketing expenses, which were relatively flat to last year. Operating income was $21.3 billion, up 25%, and our operating margin was 28%. Other income and expense was a loss of $146 million. Net income was $19.7 billion. This reflects an effective tax rate of 7% in the third quarter from an IRS change related to the use of foreign tax credits, which had an outsized impact on the third quarter rate because the change resulted in a catch-up for prior periods. We delivered free cash flow of $22.6 billion in the third quarter and $78 billion for the trailing 12 months. We ended the quarter with $120 billion in cash and marketable securities. As a reminder, our cash balance and free cash flow in the second and third quarters benefited from the deferral of certain tax payments to the fourth quarter of 2023. As noted in our earnings release, on October 16th, we made an estimated tax payment of $10.5 billion related to this deferral, which will be reflected in our cash balance and free cash flow in the fourth quarter. Turning to segment results. Within Google Services, revenues were $68 billion, up 11%. Google Search and other advertising revenues of $44 billion in the quarter were up 11%, led again by growth in retail. YouTube advertising revenues of $8 billion were up 12%, driven by both brand advertising and direct response. Network advertising revenues of $7.7 billion were down 3%. Other revenues were $8.3 billion, up 21%, primarily reflecting growth in YouTube non-advertising revenues, driven by subscriber growth in YouTube TV, followed by YouTube Music Premium. TAC was $12.6 billion, up 7%. Google Services operating income was $23.9 billion, up 27%, and the operating margin was 35%. Turning to the Google Cloud segment, revenues were $8.4 billion for the quarter, up 22%. GCP revenue growth remained strong across geographies, industries, and products, although the Q3 year-on-year growth rate reflects the impact of customer optimization efforts. Google Workspace also delivered strong revenue growth, primarily driven by increases in average revenue per seat. Google Cloud had operating income of $266 million, and the operating margin was 3%. As to our other bets, for the third quarter, revenues were $297 million, and the operating loss was $1.2 billion. Turning to our outlook for the business, with respect to Google Services, first within advertising. After a period of historic volatility, we were pleased with the year-on-year revenue growth of search and YouTube advertising in the third quarter. Second, within other revenues, in our YouTube subscription products, the substantial growth in revenues primarily reflects subscriber growth. Looking ahead, a full quarter of NFL Sunday Ticket revenues, as well as associated content acquisition costs, will be reflected in Q4 results, compared to only a few weeks in the third quarter. Play had solid growth in the third quarter, driven primarily by an increase in the number of buyers. With respect to hardware, there is a headwind to revenues in the fourth quarter, reflecting efforts to optimize the portfolio with tighter targeting of our go-to-market investments, as well as the ongoing impact from the difference in launch timing for the Pixel 6a and 7a that we mentioned last quarter. Turning to Google Cloud, we are pleased with the ongoing customer engagement with GCP and Workspace and the potential benefit of our AI solutions, including infrastructure and services such as Vertex AI and Duet. We continue to invest aggressively given the significant potential we see, while remaining focused on profitable growth. In terms of expenses and profitability, we're pleased with our operating performance. As we have repeatedly stressed, we remain focused on durably re-engineering our cost base to create investment capacity to support our growth priorities, most important of which is with AI. We have a number of work streams in place. First, we are maintaining a slower pace of headcount growth, reflecting product prioritization and reallocation of talent to support our most important growth opportunities. Second, we remain focused on optimizing our real estate footprint, including how and where we work, to reduce our expense growth. As you can see from our earnings release, we incurred $207 million in accelerated rent and depreciation in the third quarter related to these actions. Third, we have engineering work streams underway to improve productivity across Alphabet. Given the magnitude of investment in our technical infrastructure, we have a superb team focused on efficiency of our operations there. We are also making progress in streamlining operations across Alphabet through the use of AI. Finally, there are ongoing work streams that are improving the efficiency of our spend with suppliers and vendors through our central procurement organization. And to be clear, across the portfolio of other bet companies, we have also been working to identify opportunities to create sharper focus and to operate more efficiently and effectively. With respect to sequential quarter-on-quarter trends, 2 further points. First, cost of sales in the fourth quarter will reflect both higher hardware costs given Pixel family launches, as well as increased CAC for YouTube, as previously noted. Second, as usual, we expect sales and marketing expenses to be more heavily weighted to the end of the year, in part to support product launches and the holiday season. Finally, our reported CapEx in Q3 was $8 billion, driven overwhelmingly by investment in our technical infrastructure, with the largest component for servers, followed by data centers, reflecting a meaningful increase in our investments in AI compute. The growth in reported cash CapEx in Q3 is somewhat muted due to the timing of supplier payments, which can cause variability from quarter to quarter. We continue to invest meaningfully in the technical infrastructure needed to support the opportunities we see in AI across Alphabet and expect elevated levels of investment, increasing in the fourth quarter of 2023 and continuing to grow in 2024. In closing, we remain very excited about the opportunities ahead and committed to deliver sustainable financial value. Thank you. Sundar, Philip, and I will now take your questions.
Thank you. As a reminder, to ask a question, you will need to press star one on your telephone. To prevent any background noise, we ask that you please mute your line once your question has been asked. And our first question comes from Brian Nowak with Morgan Stanley. Your line is open.
Great. Thanks for taking my questions. I have two. The first one, maybe somewhat of a jump ball. There's somewhat of an investor debate about sort of the incremental return on capital to search when it comes to AI. I know it's early, but are there any examples that you're seeing with SGE or BARD on higher utility, higher conversion rates, more engagement, just something to sort of show signal around the return that could come from these investments? And the second one, Ruth, I know you've spoken a lot about durably re-engineering the cost base. I think in the past you talked about how expenses could grow slower than revenue in 2024. Is that sort of still the high-level way to think about it, or is that potentially changing a bit as investments are continuing? Thanks.
Ruth, do you want to take the second part? I'll take the first part.
Sure. Thanks for that, Brian. So overall, that's sort of a truism, as you know well, that looking to grow revenues at a faster rate than expenses as we're focused on delivering sustainable financial value. And so that really takes us to the work streams, which I tried to tick through again. Those remain the driver. They're the real priority. Those are the efforts that are going to enable us to keep expense growth as moderated as possible while supporting the investment growth that is so exciting in front of us, in particular around AI.
And to your first part, obviously we see AI as a foundational platform shift and, are excited about the opportunities across our business. It starts with search, and I've been pretty pleased with how the user feedback has been on SGE. We are rolling it out to more users. Through it all, we are making sure the product works well, and we are generating value for our ecosystem, and that ads transitions well. And I think, I view this as with AI, the opportunity to evolve search and assistant over the next decade ahead. And I think, as we've always seen, when you continue to invest and build great experiences, you can get value on the other side. And I do think over time there'll be newer paths, just like we've done on YouTube. I think with the AI work, there are subscription models as a possible path as well. And obviously, all of the AI investments we are doing applies across cloud too. And I'm pretty optimistic about what's ahead there as well.
Great. Thank you both.
Your next question comes from Doug Anmuth with JP Morgan. Your line is open.
Thanks for taking the questions. One for Sundar and one for Ruth. Sundar, you talked a lot about AI and was hoping you could talk more about Gemini and how it will differentiate from other models, some of the multimodal capabilities, and what new experiences or agents you think it could unlock, and how we should think about timing. And then also just on cloud, hoping you can talk about some of the factors there on the decel in cloud and just what you're seeing in terms of optimizations, and is there any sign of new workload deployments taking place? Thanks.
Thanks. Good questions on Gemini. Obviously, it's effort from our combined Google DeepMind team. I'm very excited at the progress there. and as we're working through getting the model ready. To me, more importantly, we are just really laying the foundation of what I think of as the next generation series of models we'll be launching throughout 2024. The pace of innovation is extraordinarily impressive to see. We are creating it from the ground up to be multimodal, highly efficient at tool and API integrations, and more importantly, laying the platform to enable future innovations as well. And we are developing Gemini in a way that it is going to be available at various sizes and capabilities, and we'll be using it immediately across all our products and internally, as well as bringing it out to both developers and cloud customers through Vertex. So, so I view it as a journey, and each generation is going to be better than the other, and we are definitely investing, and the early results are very promising. On cloud, maybe what I would say is overall, we had definitely started seeing customers looking to optimize spend. We leaned into it to help customers, given some of the challenges they were facing, and so that was a factor. But we are definitely seeing a lot of interest in AI. There are many projects underway now. Just on Vertex alone, the number of projects grew over 7x. And so we see signs of stabilization, and I'm optimistic about what's ahead.
Thank you, Sundar.
Your next question comes from Eric Sheridan with Goldman Sachs. Your line is now open.
Thank you, sir, very much for taking the questions. Two, if I could. Sundar, you guys led over a year ago, starting with Performance Max, and I wanted to know if we could get your updated thoughts on how AI might impact the broader advertising industry and how you're aligning Alphabet and Google's goals with AI and where it might take the advertising industry in the years ahead. That'd be the first question. And then about a year ago, Philip and Ruth started talking about some of the brand advertising headwinds that YouTube was facing. As we start to lap those headwinds, how should we be thinking about a broad recovery in brand advertising versus elements of still headwinds that are being faced in the broader ad space, specifically with YouTube? Thank you.
So maybe I take the first one. We're very pleased with how Performance Max is performing. It gives advertisers really maximum performance across all inventory from one really AI-powered campaign, and it's probably the ultimate example of AI in action across our ads products. It's delivering excellent ROI. Those using it achieve, like on average, over 18% more conversions at a similar cost per action. So since rolling it out about 2 years ago, we've continued to expand the features, give advertisers additional ways to steer how it works, via a lot of things like account level negative keywords, other details here. We launched new lifecycle goals, customer lifecycle goals. We call them a revamped asset creation flow that really helps business adapt and scale their most successful creatives. I think that's one to watch. We will also continue to build other new PMax features based on all the advertiser feedback we're seeing. So we're very, very encouraged by the progress here. Overall, maybe there was a second part to your question a bit on what we're hearing from the customers out there. Look, driving ROI and efficiency is still top of mind for many, right? It's a rapidly shifting and still quite unpredictable consumer landscape out there. Our AI tools are very well received. AI, Gen AI are top of mind for everybody, really. There's a ton of excitement, lots of questions about it. Many understand the value. Nearly 80% of our advertisers already use at least one AI-powered search ads product. We're hearing a lot of good feedback on number one, our ads AI essentials, which are really helping to unlock the power of AI and set up for durable ROI growth on the advertiser side. Those are products like the foundation for data and measurement, things like Google Tag, Consent Mode, and so on. And obviously, Search and PMax, we talked about it, and then all the Gen AI products, all those different ones. So there's a whole lot of interest in those products, yeah.
And then on to your second question regarding YouTube. As we said, overall year-on-year growth in revenues was driven by both brand advertising and direct response. But very much to your question, yes, there was a stabilization in spending by advertisers. We're really pleased about that. We're particularly pleased about the ongoing performance in the living room and on Shorts. And as I said, that's both watch time growth and monetization. I'd say the other thing benefiting YouTube is the retail strength we talked about with search, retail strength in APAC in both search and YouTube. And, that really began in the second quarter, continued in the third quarter, but that was another contributor. So quite a number of things going on. Feel good about the results the team was able to deliver here.
Thank you so much.
Your next question comes from Lloyd Walmsley with UBS. Your line is open.
Great. Thanks for taking the question. Two, if I can. First, as we just think about the rollout of SGE across the user base, like how far along is that? And how do you balance the product rollout and consumer uptake versus monetization in that transition? And then the second one, also sort of generative AI related, how quickly are you guys finding new ways of optimizing, whether that's shrinking model sizes, chip efficiencies, or anything else? And do you think overall capital intensity of the business scales up, or do you just find ways to do this more efficiently as usage scales? Anything you could share there would be great. Thanks.
On the first part about SG, we are still, in very, very early days in terms of, how much we have rolled it out, but we have definitely gotten it out to enough people, and both geographically across user segments, and enough to know that the product is working well. It improves the experience, but there are areas to improve, which we are fine tuning. Our true north here is getting at the right user experience we want to, and I'm pretty comfortable seeing the trajectory. And we've always worked through these transitions, be it from desktop to mobile, or from now mobile to an AI enhanced experience. So it's nothing new, and I feel very comfortable that as we go through it, the strength of our teams, both on the organic side as well as ad side, to drive the right experience for users, including ads, will pay dividends. And I think we'll continue to make improvements and make progress there. On your second question, at a high level, I would say all through we just celebrated 25 years, and of all the things I was proud about when I looked at the strength of the work we have done across our infrastructure as a company, our technical infrastructure as a company. And, various given stages at a given moment in time, when we adopted new generations of technology, we've looked at the cost of it. But then the curves, the efficiency curves we have driven on top of it has always been phenomenal to see. And I see the current moment as no different. Already through this year, we are driving significant efficiencies, both in our models, in training costs, and serving costs, and our ability to adapt what's needed to the right use case. And so I think we'll do everything that is needed to make sure we have the leading AI models and infrastructure in the world, bar none, and we'll continue driving efficiencies from there.
Okay, thank you.
Your next question comes from Michael Nathanson with MoffettNathanson. Your line is now open.
Thank you. I'm going to ask you guys a multi-part question on YouTube TV. So firstly, what were the broader objectives for getting Sunday Ticket? How did it perform versus those objectives? What lessons have you learned from having the NFL Sunday Ticket? And how does that affect your appetite for more sports going forward? Thanks.
So, as Sundar said earlier, we're several weeks into our first season, and we're very pleased with how it's going. I think in the broader context, you have to look at it as our overall YouTube subscription strategy. The great feedback we've gotten so far on the YouTube experience is very, very significant. People love the navigation, they love multi-view, they love the chats and the polls, and frankly, people are very happy with the lack of latency here. The number one piece of concrete feedback the team has gotten is actually that people want the ability to pick their own games for multi-view, which is multi-view is the awesome feature we started rolling out on YouTube TV that gives fans the ability to basically watch multiple streams here at once. And overall, the teams are working hard to build a fantastic experience, and we are really trying to stay focused on getting our first season right and providing the best possible experience really for fans here.
Thank you.
Your next question comes from Justin Post with Bank of America. Your line is now open.
Great. Thanks. A couple questions on Q4. Can you provide any color on if there's been any pause in advertising around the Middle East conflict in October, anything we should be aware of for Q4? And then second, when we do think about the Sunday ticket impact, I know you can't give us revenues or expenses, but overall, would that be a headwind to margins in Q4 or something we should be thinking about? Thank you.
So look, on the first question, obviously this is a tragic, there's no words to talk about what's going on. And all of our focus has been on supporting our people there and how our products can be as helpful as possible in this very painful time broadly. And so, that nothing really to add. And then in terms of the second question, Sunday ticket, the only thing I tried to call out there is that clearly this is the first full quarter of Sunday ticket that is contributing overall to the subscription revenues that we see. That's in part of other revenues. Also, obviously, it is contributing to higher CAC in the fourth quarter. So tried to make that really clear. And as we look longer term, we expect to generate an attractive return over the life of the deal. We're continuing to invest in support of this and excited about the additional opportunities that come out of it, working with partners to deliver clips and other opportunities. As we've said, we've heard positive feedback from our partners at the NFL about the new features and live stream reliability. And this is really a clear example of our ability to execute big partnerships with excellence at scale and really leverage a lot of the extraordinary magic at YouTube and across Google. And that's what we're excited about.
Great. Thank you.
Your next question comes from Ken Gawrelski with Wells Fargo. Your line is now open.
Thank you so much. Two questions, if I may. First, how do you think about the future structure of AI-driven search capabilities? Will activity remain centralized in a search bar, or will it be decentralized and present in many different applications, including on third-party applications? You alluded to Bard being integrated into multiple Google experiences early in the call. And then the second question is, any update on the Chrome cookie deprecation plan to begin in 1Q24? What have you seen so far based on your early testing of Privacy Sandbox, and what advertiser feedback have you received?
On your first question, look, I broadly think of it as, people are looking for information. They've always looked for it in many, many different ways. We've given the product search example. People can directly go to Amazon as an example, or come to Google. So if you zoom back and take an information view of the world, there's always been many different ways to get it. And part of our work we do in making search be world-class and give users what they're looking for, so that we can get at as much of that intent as possible. So I don't see that changing. With mobile, there were more ways people could get information, but we worked hard to make search work better in the mobile world. And similarly, I view with AI, there'll be many ways people will get information, but it also offers us an opportunity in search and in Assistant to take it to the next level and answer use cases which we couldn't have done before, and expand the diverse set of needs where we are a source. So that's how I see the opportunity ahead.
And to the second part of your question, yes, Chrome still plans to begin phasing out third-party cookies in the second half of 24. In the last several months, Chrome has really made significant progress on the Privacy Sandbox with APIs for developer testing, and they're now generally available in Chrome. Our ads team is testing these APIs, and as we shared back in April, the preliminary results of our interest-based ads testing showed that a combination of what we call privacy-preserving signals and AI optimization actually provides positive results for businesses preparing for a cookieless future. We also recently announced that in Q1 of 24, we plan to deprecate third-party cookies for 1% of Chrome users, and this will support developers, obviously, in conducting their real-world experiments to assess the readiness and effectiveness of their products in this without third-party cookies. And we're overall encouraged by the ecosystem engagement on Privacy Sandbox. We'll continue to work with the industry and regulators and how these technologies can support the transition to, frankly, a more private web.
Thank you.
And our last question comes from Mark Mahaney with Evercore. Your line is now open.
Thank you. 2 questions, please. Ruth, you talked about these elevated levels of investments in Q4 and in 24. I'm sorry, were you referring to just CapEx or CapEx and total expenses? And then on the comments around stabilization in cloud, is this something that you just started to see in the September quarter, or had you seen that starting earlier in the year? And if you just started seeing in the September quarter, would you have any thoughts on why you would have seen it, why Google Cloud would have seen it maybe later than some of the other hyperscalers? Thank you.
So I think what you're referring to is my CapEx comment. I was trying to make the point that we are committed to meaningfully investing in CapEx, given all the opportunities we see. We do continue to expect elevated levels of investment in our technical infrastructure. It will be increasing in the fourth quarter, and talked about some of the difference in timing, muted timing in the third quarter due to the timing of supplier payments. And then tried to make it clear that we will continue to grow CapEx in 2024, or more specifically to your question, 2024 aggregate CapEx will be above the full year 2023. So that was the main one. And then, as it relates to cloud, as Sundar said, what we're really excited about is the revenue growth does reflect healthy customer adoption across the portfolio, and that's infrastructure, data analytics, it's security, and so where I can't comment on others, but we feel good about where we're sitting here and looking forward, and we'll let you do the forecasting. DCP growth in the third quarter was above the growth rate for cloud overall, and we feel really good about the work that they're doing there. And then, of course, in addition to that is all of the contribution from Google Workspace.
So that is it. That is the investor questions finished for the Google call. Now I'm going to go ahead and end this stream, and then in 7 minutes we have the Microsoft earnings call that we're going to cover. We're trying this. You shouldn't have to go anywhere. As soon as we close down the stream, it should immediately bring you to the Microsoft earnings call. If for whatever reason it doesn't, here's the link right there. You can see the link right there if for whatever reason it doesn't. But again, as soon as we close down the stream, it should immediately bring you to the Microsoft earnings stream, which is going on right now. And so we'll see you guys over there. Again, this should work. Let me know if it doesn't. But again, the link is in the description at youtube.com/beginner trading. We're streaming right now on the second stream. And we're going to close this stream down, bring you to the second stream, and cover the Microsoft earnings call, which starts very soon. Very soon.